Nicole Petalides. We welcome in Ted Thatcher, president of Bright Lake Wealth Management, to take a look at the big picture here. I mean, I'll start with some of the thoughts on the U.S. economy. We've already gotten in some prints over the last few days. Any of them stand out to you to sort of really signify the health of the U.S. economy?
Absolutely, Nicole. I think we've gotten in a string really of economic data over the last several weeks, which has really encouraged investors. Notably this morning, the initial claims number came in at 236,000, below expectations. We saw the Q1 GDP third revision up to 3.8, higher than expected. And then if we look, toward the other economic vital signs, inflation, a few weeks back now, I guess it was, 2.4% year over year. We've seen consumer sentiment come up after its downward slide. It's expected to continue to increase this Friday. The only real blemish that I'm seeing right now at the forefront is, maybe the consumer confidence numbers. Consumer sentiment, of course, is more focused on how consumers feel about their own financial situation. Consumer confidence is more about their confidence in the economy overall. And I think really the way I would look at that is there's just been a lot of confusing things going on, whether it's with tariffs or the uncertainty in the Middle East. But when we look at all that positive economic data, I think it's a real breath of fresh air for investors. Things have been a little bit more stable. We've seen that VIX number come down.
So you feel like there are more tailwinds than headwinds at this point?
I do. I mean, of course, we have these questions still about what's going to happen with the big, beautiful bill. And, we want to see those tax cuts become permanent. I think the market does to maintain its stability. But, despite all the news headlines around, the uncertainty of tariffs, of course, that caused volatility, but really it's leveled off. We haven't seen all the pens to paper yet with the Chinese trade deal that's been promised. But more or less, again, it's leveled off. We thought, if I looked at the news the last couple weeks, we thought we were on the verge of World War III. And the truth is beyond a little bit of spike in concern around the price of oil, which has actually come back to, I think, below where it was before everything kicked off in Iran. That has also leveled off. And so I think there is some positivity here. And I think it's quite welcomed given all the uncertainty.
Tell me more about, when you're an investor here, you look at the Mag 7 names, two of the names you're bullish. One of the names you're more bearish, right? And so I don't know if that's usual or unusual for folks, but you don't take them as a group. You take each one by its own name. I mean, let's start with this tech trade and NVIDIA.
Yeah. Well, I mean, it's hard to really be anything other than, I think, confident in NVIDIA right now. They beat on their quarterly earnings by quite a bit, actually. They just had a record high day yesterday. Their price targets by many institutions have been raised. Some saw as high as $250 a share. And I think it's been really driven by, things with all the tariff uncertainty settling down. I think there is confidence that despite the concern around the sort of regulatory risk, that something will be figured out with how China is managed for them. And then, of course, their revenue's just been exploding because every one of the, mega cap companies is building out their AI infrastructure. And where are they going to go anywhere other than NVIDIA's hardware, of course? And so I think there really is a continued bull case for AI. And further on the value side, I really think Google's a great player here, too. Of course, there's been this sort of underlying concern for them around their Blue Link search business revenue, which is, Google's claim to fame, really. But they have 230 million paid subscribers. Gemini's performance has absolutely rivaled that of ChatGPT. And now, as Sundar announced that Google I/O platform a few weeks ago, they are moving toward integrating Gemini into their services. And when it's trading at the 18 to 19 price to earning ratio that it is, when you compare that to the rest of the Mag 7, it starts to look a lot like a value buy.
Right. Okay. Well said. We had a guest on earlier who thought there was 20 to 25% upside in NVIDIA in the next 6 months. So very bullish on that name as well. Let's talk about Apple, which has disappointed investors, let's say year to date. 6 months, it's down 20%. It's not really having that V-shaped recovery like the rest of the market. In fact, it's right now at around $201. What say you?
I think Apple has lost its way a little bit. And, that comes down to, many things, really. But this company has been an iPhone selling company and a hardware selling company. Of course, that makes up the majority of its services. And really, where it's grown its revenue at all has been around other hardware. So it's those, Apple AirPods that you need to buy again. It's the, charging cable that you need to replace. And that is not an innovative stance for a company with Apple's repertoire. Their claim to fame at their Super Bowl ad was a new way to do emojis. That is not a marketing strategy we see for a cutting edge leading AI company. We've had Siri now for who knows how long, 15 years, and it still barely works beyond setting a timer for my, kitchen cooking. The problem is it's been trading, and why I say I'm bearish on it, it's been trading at a 30 times multiple on its earnings with no revenue growth. That type of multiple we would expect to be at a company that's growing their top line. In 2024, Apple's top line grew 2%. I think year over year, it's up about maybe 5 or so. And when I don't see any real meaningful, cutting edge movement on the AI side, when I see a lot of where the revenue is coming from these types of sources, and when I see it trading at the PE that it is, that's what makes me bearish on Apple.
Understood. And then just the final thought on that PCE print tomorrow. We were talking earlier about labor. Right now, we are in a pretty good state with the labor market, but there is the threat of AI. That was one conversation. But truly, the quits and things like that have been relatively quite low right now, according to Ellen Barkin of the Fed. What do you think about the print tomorrow?
I think PCE will probably come in pretty consistent to where it has been. I don't expect any, surprises. I think most estimates are about 0.1% up. And so I would expect it to come in around there month over month. I do think when I also reflect on the consumer sentiment we had briefly discussed earlier, when consumers are feeling reasonably good about, their own financial situation, that tends to tell me that there's not going to be a big surprise when it comes to what we see in terms of how they're spending.
All right, Ted Thatcher, thank you so much, president of Bright Lake Wealth Management. Great to see you. Appreciate it.